of May 2023. Thanks for joining. Obviously, Ash will be in with me a little bit later, as will George today. George makes his return, so that'll be fantastic to see him in as well and see how he's been going. I better just change my background. I don't know why it wouldn't let me do that. That's kind of crazy. Let me try again. There we go. Right, happy days. Once again, welcome aboard. Let's get stuck in, shall we? And we'll start, of course, with gold and see how we can come up, or if we can come up with a result on the breakout trade for today. Just hang on 2 secs and I will make sure we're going live where we need to be going live. Have a look and see what gold did last week. It wasn't trading last week. Okay, that should go us there. Brilliant. Right, so gold. Let's take a quick look. And the first thing I see is that we're in between the pivots. And you've got to hate that reason. Well, they tend to bounce price. That's why. Anyway, let's see what we can do. The high of the range between Asia session now is 2019.24, trading straight into the pivot weekly and DR1. Why have I got DR1 showing there? It's a good question. Don't want to do that. Sorry, wrong pivot. Inputs. No, don't want that. Okay. That's a bit better. Not great, but a bit better. Right, like I said, the high is at 2013.28, so we will be looking at 2014 as our breakout, and the low, which is the second bar of the day and further. So the low would be that bar there at 2008.66. Now, I think that one's got better prospects for profit than does this one, frankly, because it's trading straight into resistance. I'm starting to add filters to this. I'm not going to trade it as I did on Thursday. I did take the trade, but I closed in profit in here somewhere. And that was a good thing to do because it went that away. So, yeah, I'm going to start adding filters to this and not trading them willy-nilly because I think there are reasons not to trade these at times. And I think today is one of those, trading straight into the weekly pivot and DR1. What I'd prefer to do if I was to be trading this, and it's pretty clear to me what I need to do. I need to wait. I need to wait until the weekly pivot's broken and then retested perhaps there on a smaller time frame, 4 hour, something like that. If I am to trade it long, do I want to trade it long? No, because my bias is short. But I'm trading straight into support here as well. So it's not something that I would jump onto very, very, very easily. What I would do, however, is share a couple of things with you that I do think are possible. And the first of them, you'll be surprised to know if you've been watching this for a while, that I am once again placing an order long on the Canadian dollar versus the Swiss franc. And this time I'm trading the weekly bar here. So entries above there, stop losses below. And it's pretty much the same levels as I used last week, I think. Not far away from it. The entry is at 0.6679 if you're interested. And the stop loss is at 86. Below that would be 65.93. So 0.6593 is the stop loss. And the first take profit would be at 0.6757. 0.6757. So if that interests you, then we're looking to play a reversal here. Now, there's a little bit more to it than just thinking that this has got to go long, right? There's a few things working here for me. One is what I call a tweezer bottom, sitting here with two long tails, sitting and saying price wants to go higher. And we've had a little pullback on that. Now, the way I trade is if I see something that looks like a false break, which this does to me, so we've broken, we've consolidated a little bit, not too much, come back above the trade line and then retest it. Trade line is not relevant on a weekly chart because I don't have a second low. But what I do have on the daily is this chart that I used last week. And we tried to trade this last week as well, using this bar, then this bar. I think we got our stop losses down here, didn't get entered into any trade. And here we go again, looking for pretty much exactly the same trade. So it does look like a false break of this support trade line to me, where we have broken it, consolidated back above it, retested it. Now we're settled back below it. So my contention would be if price is to follow momentum or recent momentum, which of course is Thursday's candle, then price should continue to go lower and not affect our trade. If, however, that doesn't happen, I suspect that we're going to retest these highs up here. And that is what we want to see, obviously. So that's CAD Swiss, the only trade I've got in the market at the moment. I do have a pretty strong watch list, however. But before we have a look at that, let's have a look at what I call game changer bars. And those of you here for the first time have got no idea what a game changer bar is. Let me explain. They are all about what is known as a key reversal bar. Now, a key reversal bar is one, actually, there's not a real definition of a key reversal bar, but my definition is it's a candle whose high, if we're looking to trade it short, obviously, whose high is higher than the previous candle, and it closes on or near its low, as did last week's candle. Now, just because you see a key reversal bar, or what I call a game changer bar, does not mean that we just jump into the market. What it does mean is that we take notice of what it's telling us and then see if the context fits the narrative. So here we've got the bodies engulfing the previous body. So we're looking to rally here. We did rally to the breakout area of this little range. And now we've bounced off that range. We're at the pivots now. And on the daily chart, you can see exactly what I'm talking about with the retest. So we've broken this one, we've retested it and come back below it. That gives me another potential false break here of that resistance trade line. So it's the upside down version of what I've just shown you. So break, consolidate, back underneath, now retesting on the daily chart. So if tomorrow that candle was to be exactly as it is right now, I'd look to trade that short underneath it. I'd probably swing the stop losses up to here because it makes more sense and far safer. It gets it above that level. So that's what I would do. And I'd get some profit in the bank before I hit these lows. So I do like Aussie Swissy for the short, but I want to see the daily chart give me what I'm asking for. If it goes straight away today, then so be it. But it's definitely on the cards for me that this is going to go short. So it's definitely on my watch list. As is the next one, Aussie Kiwi. Now, Aussie Kiwi is suggesting that we go long here. And you can see we've got a little bit of support with a trade line here, or even a trend line, if you like. We've got multiple rejections of this here, here, here. Again, a little tweezer bottom, slightly out of context. Why do I say that? Because when I see a tweezer bottom, I want it to be exactly there at the bottom. And this is kind of midstream for me. So I do agree with the directional bias, but similar to what I've just said, I want to see this break the monthly pivot, come back and retest it. So that can happen on any chart, daily, 4 hour. And it looks like it wants to have a crack at that now. So I'd love to see this break here come back and test the daily pivot and the weekly pivot, so that either tomorrow or Tuesday or Wednesday, we can look to trade this long above that bar. That would be handy. So that's definitely on my watch list as well. Kiwi, to me, looks as though it's under a little bit of pressure at the moment, and I've got quite a few opinions on what's tradable against it. Aussie Kiwi certainly one. I won't go through the rest of those because I don't like them as much as I like these ones against the Kiwi. As I said, this one's Euro Kiwi, and if we have a look at Euro Kiwi in context, you can see it's been riding up this, well, I suppose you could call it a trend line. It's a little bit sharp for me, but there it is. And we've had another strong rejection of that and this horizontal level here. So it does look as though price wants to at least have a look at this monthly pivot. And after that, a little bit of a sell-off to that level, you would be expecting a bounce here. Not sure how much it's got in it, to be fair. Probably the monthly pivot is the first area that I would like to take profit at. The daily chart is showing that that is indeed similar to what I've just shown you on the other pairs, a potential false break here. Now, when I see a false break like that, hasn't had a lot of time underneath this trade line, but if I saw a retest of that, and that's what I'm looking for now, once we break a level, we always look for it to retest that level. And this is it. Hasn't been retested yet on the daily chart. 4-hour chart may give it to us. No, it didn't quite retest it either. So I'm still looking for this to pull back. You can see the two pivots there together. They are attracting price at the moment. If it were to go down here further, then I would look to trade this long. So again, Tuesday or Wednesday, depending on what we see with this particular candle. The other choice on the Kiwi, or to trade against the Kiwi, would be pound versus the Kiwi. Now, this is doing pretty much exactly as I would have liked it to do. My question is, and very, very similar to Euro Kiwi, of course, we've been running up here very, very rapidly. So it's to a degree overbought. And I get that, completely get that. But we have once again got a weekly game changer bar suggesting that we buy. I'm not a fan of buying a candle that big when I've got a risk of, 350 pips, I think I measured it this morning. Thereabouts, even more, 370 odd pips. And I need to take profit at 140. Now, that's not the worst, pardon me, thing to do, but it's certainly not the best either. And for that reason, I think there's better opportunities than there is now on pound versus the Kiwi, though I do like the directional buys. If I have a look at that in context, you can see how long we have been sitting in a range, and we're challenging the top of that range at the moment. What I need to see, well, really I don't like the directional buys short term. I want to see it pull way back here, even come to the bottom of that range again. So I guess I'm talking myself out of being bullish at all. But there's one thing that does look interesting, and that is this thing here. So the immediate resistance level has been broken and retested. However, there's a secondary resistance level in these candles here. So it is far more dangerous, in my opinion, than something like Aussie Kiwi. So I think Aussie Kiwi at this stage will be my focus going into the week. But yeah, Euro Kiwi, better than this one. I think this runs a poor third at the moment, to be fair. And I would like to see price come back down to that level. Anyway, that is it as far as the Kiwis are concerned. The other two on my watch list are oil. Oil, I think, is shaping up nicely for a buy. And we are at a very strong support level. We've bounced off a very strong support level on oil around about the 66.25 mark. Rejected that very, very dramatically here, and of course here. So this range that we broke to get back to that level back in March is exactly where I would like to see price come back into, then retest the bottom of it and let me let me get long. To do that, obviously we need price to rally back into that range. Big double bottom sitting there on the daily chart, and I'm looking now for a higher low in this vicinity. Like the fact that we've got a couple of pivots here resisting price at the moment. And what I would like to see happen is price to get down a little bit further, maybe down to here somewhere, so that I can trade it long but get some profit in the bank before I hit those pivots. But that's very much on my watch list. Oil, I'm going to ask Ash very shortly about a fundamental opinion on oil, because it's very much fundamentally based. And despite the fact that I think there's a potential great setup here on its way, it will depend entirely on what's going on around the place. Well, not entirely, but it'll certainly be a factor. And the other one is my old favourite, dollar yen. Now, dollar yen, I've been squawking this one for quite some time now because it's been following this channel, and it's related very much so to the dollar index. Now, the dollar index is very, very interesting at the moment because it has just broken out of the range it's been sitting in, pardon me, for the best part of 6 weeks. Now, this is going to result in two things, in my humble opinion. It's going to just keep going, as the price would have you believe at the moment, because very, very strong buying bars, and it has broken that level, as I said. I'd love to see a retest. If I were to see a retest of that level, coming back across the daily pivot, testing the weekly pivot, lovely confluence area there. That's just fantastic. Doesn't get any better than that as far as the confluence area is concerned. And then I would be looking to buy this. That said, if price were to sneak its way back below here, then it probably will go in the opposite direction. But I've been squawking this level for ages, just hasn't moved off it. Now it has. And I think there's an opportunity to trade this up to here, around about the 105 mark, a little bit higher than that. And there, I think we're going to see this stay in a range for some time, because I need to see something dramatic happen in the world. I think that's not off the cards. It's very much on the cards that something dramatic will happen. It might be the Fed. It might be interest rates all over the place. It could be all sorts of things. But I think we're going to be bound in here for a little bit of time. That's what I'm seeing anyway. So up to here, then start to be a seller, et cetera, et cetera, et cetera. That's my plan, Ash. How you doing, mate?
Yeah, I'm doing well, mate. Doing well, not too bad at all. Yeah, just on the oil.
Yes, oil. Talk to me, oil.
Firstly, well, interesting, mate. I mean, you know, there's the elections in Turkey seem to be shifting things around, certainly in that region. Now, I don't know whether that will have any specific bearing on oil. But if you sort of look at some of the kind of micro aspects, it might be sort of a bit of a combination, micro macro. The forecast from the EIA, which is the governing body for energy, they're suggesting that actually retail prices for oil will drop a little bit this year from last year. So there's not hugely bullish signs there. And also we did see a build in crude oil inventories last week from the United States. So there's not that kind of, like, you know, the immediate confidence. You know, if you look at those particular numbers, that would suggest a big rally right now. There doesn't seem like there's any huge issues, if you like, in the dynamic with oil. Which is what, you know, before, when we saw oil really rally hard, there was this dynamic where the US was drawing down inventories and there was just a lack of supply.
Yeah.
We don't really have that, but what we do potentially have is an escape of recession. And I think some of the reason that oil's been down here is because of that looming recession. So some of the central banks are sort of starting to change their narrative and seem a bit more confident. Now, that could change in the winter, and the winter will be a really interesting time, I think, for oil. But it's not necessarily the case that it would rally hard at this particular period. But I think over the longer term, we should see oil up. Now, if you're looking at daily charts, then it would look like a potential position to attempt along. I suppose if you're down to the kind of intraday, might not be quite as safe to be looking at trading oil long. But the level looks good, and there's not really any reason to be selling oil at this particular stage, I say, because those recession concerns have lifted a little bit, and we are seeing some pretty bullish markets as the markets have opened up right now. They've got a little bit stuck, but FTSE 100 has started pretty, relatively keen, and the metrics look pretty good from those accounts. So I wonder whether we could be in a bit of a back and forth without really taking off.
I'm thinking that the dollar index is telling me that. Maybe a little bit of a rally in the dollar.
Yeah, I agree with that, and I'll tell you what else. I mean, if we look at we'll start with the FTSE, but the FTSE, I am looking to buy it today, and I'm just waiting for it to come back to this particular level here. But what you're saying about the dollar is really interesting. If you look at the seasonal charts, now the dollar really was meant to rally for 2 weeks, and it's rallied for the most recent week. So the first week it didn't rally, the second week it did, and it might be the case that the seasonals are slightly out of alignment, and that would suggest that there could be some a little bit more upside in the dollar. But the seasonal charts have turned, and they turn, specifically this week, and the dollar actually becomes the weakest currency over the course of the next week, month, and into 3 months. So we really are looking at a potentially a very a tepid situation for the US dollar over the course of the summer, really. So that would support what you're saying about oil. The Aussie's also relatively weak, but I've just heard that Australia's done some sort of gold, dealing gold, where they're gonna is it that they're gonna hold 19% of the world's gold? They're gonna have sort of like some sort of situation where they're able to mine 19% of the world's gold. I'll have to look into that story a bit more, but it sounded really bullish for the Aussie.
When did you hear that?
Literally just half an hour ago. They said something's gone on. I don't know if it's a company in Australia or not, but there was something going on.
That must be post the Aussie close, because I've got gold stocks, and they did okay, but they didn't take off. So
there might be one. I'm not sure, but that would need to be looked into. Whatever that story is, but it does appear that that Australia's done something with the gold
market. I'll
have
Phil onto that as soon as we finished.
Yeah. Get him checking out. So the Aussie dollar is also rallied, but another weak one this week. When it comes down to the seasonals, strongest looks like the euro and the Swissy. So if we take all that information into account, then Aussie, not the Aussie dollar, sorry, we should be looking at dollar Swiss for a potential short. And we are starting to see the possible short. Let me change these to clean, so we've got just an easier thing to look at. And we can just look at the price action. See this W bottom pattern sort of starting to form here, but it looks like if this is a complex W bottom pattern, that would suggest that there's a double left shoulder here, which would suggest coming back down again into these lower areas. So probably in a sell zone here for the dollar Swissy. So looking potentially for some dollar Swiss shorts. Euro dollar would be looking for at least a push to this point here. So it looks like the euro might well see some upside against the dollar, which again would match that seasonal bias. And then if we're looking at the euro Aussie, I've seen the euro Aussie actually do look like it's coming down currently today. So it doesn't look like the Australian dollar is the one to look for in alignment with the seasonals, and it looks like it might well have broken through here. It might well test that level before it goes down anyway. So these still could play out, and then the Aussie Swiss as well is the other one to be looking at. And again, Aussie Swiss looks like an inverted head and shoulders. So this actually looks pretty bullish. But maybe if it can get up to this area, then we could look for another push down. So there's a few things to consider. When it comes to the currency market, I'm not particularly interested today, because I don't think that there's enough when it comes down to any drivers that could really shape some of those longer term pictures. And the longer term picture as well on COT data, very strong euro, very weak dollar. So it does suggest that we could see some further upside in euro dollar. And there are some whispers that the central bank in the United States are likely to pause at the next meeting. So we do need some data which would suggest that that's going to happen. And we got some CPI data from Europe this week as well. So I don't know whether that possibly shapes where we see the euro for the week, but you'd want to sort of like see what the price action is going into that number. And if you get a buy, if I was to get a buy signal, I'd buy it up and then see what that number was. But if there's no buy signal, then I'd wait for the number to pass. And if that then suggested that we should be going long euro, that'd be the time for me. So probably nothing for me until it looks like Wednesday on the, when it comes down to, actually Tuesday would be okay. We've got some GDP out from Europe on Tuesday. So there's those four are the ones that I'm kind of considering as tradable opportunities this week.
Okay, so we're arguing again this week. That's interesting. So I'm bullish the dollar, you're bearish.
Well, not necessarily. Not necessarily. Are you bullish for the week, or are you bullish for a few days?
Well, it depends how fast it goes. Like I said, the dollar index is got a level. I can't remember what it is. Hang on, I'll just have a look. It's got a level that I think is, I won't say fait accompli. There's no such thing, but
yeah,
to me, I can really see 105 again.
Right, okay.
So we're at 102.5. So I'd have to really get a wriggle on if it's going to go. Yeah. And there doesn't seem to be a reason for that.
Yeah.
The only thing I would say, and I find it curious,
Yeah.
The old adage, sell in May and stay away, right? Which is a stock market thing.
Yeah.
Suggests to me that is a seasonal bias. Yet we're saying a weak dollar as a seasonal bias. What does that say about the stock market?
Well, that's interesting, mate. But I can tell you the sell in May and walk away is just a nice rhyme, because actually it should be sell in June and feel the gloom, because it's really June that it starts to go. It's right at the tail end of May. It's not really the start of May that we tend to see the stock markets perform poorly. It's usually right at the end into June and into those kind of summer months. So that I wouldn't pay too much heed of. But you're absolutely right. A weaker dollar should push the stock market up. Now, the sell in May aspect as well is also down to a lack of volatility. I mean, that's a lack of liquidity. Now, that can create quite a volatile market where you do still get quite nice opportunities. The question really is, firstly, and this is the big sort of dynamic with gold, and where I'm scratching my head a little bit with gold, because the situation looks to be, and many central banks are starting to say that the disinflation is starting to really gather some pace, and by the end of next year we could be as low as 3%, which is not low, but it's low in comparison to where we are. However, they're also saying that interest rates may well be in and around where we are. If gold is a inflationary hedge, then it doesn't really sort of like act as much of a hedge when you got disinflation. And if it also gets affected by the US 10-year, well, you think the US 10-year yield would stay relatively high if the interest rate is going to go high, stay high. So those two factors would suggest actually lower gold from this particular point. But you've got the US debt ceiling coming up as well. There's still sort of like factors that could see gold rally from here. But those kind of those immediate aspects that tend to push gold higher, they may well be dissipating a little bit. So I don't really know what goes on from this point. It might be that we mess around in this area for longer than people think before we then potentially take off again.
That's kind of what I'm seeing in the dollar index, which makes sense. It's correlated, obviously. So,
yeah. Well, you see, the debt ceiling is another one, mate. I mean, that also could suppress the moves in the dollar for a little while. So I don't think it's quite as straightforward.
As they devalue it again by printing another lot of trillions. Crazy
exactly,
people.
exactly. Yeah,
But
and
they will.
do
You
they?
know, as sure as God made little green apples, that's exactly what they'll do.
That's exactly what they're going to do. But then also at some point, the as sure that's exactly what they're going to do will change, so they can't do it anymore. So I don't know. I don't know whether it's going to be this one. I mean, we've had a particularly rough 2 years, so I don't know whether this might be the day that they try and figure something else out, because that's the one tool that we know about. Is there somebody in there that's a bit more creative that can come up with a different plan? It's possible. So the dollar might not be quite as buoyant today. Sorry, in the course of the next 3 months. But if they do raise the debt ceiling, then of course that does change things again. You know, that starts to change the dynamic again for the dollar. But really, onto this week, I'm not particularly interested in anything, but I am looking for long stocks. I'm just looking for, FTSE's actually behaving. It's a little bit far away from where I want to get into yet. But down here, I'm really interested to see whether we got a buy signal, because there is a monthly pivot sat up here, and I'd quite like to see whether we get there. You can see, this area is causing some resistance right now, but I am looking for a long in the FTSE 100. Just as we start the week, there's not much data today to really sort of push the negativity, and the stock markets, they look relatively buoyant at the minute. So I don't think we're going to get the negativity that we've seen quite recently. We're kind of caught in this band right now, but it might just be that we've just broken out of it, and we can start looking for some slightly more positive positions. Oh, actually, we might be there already on that one. Yeah, I'm going to look from here, mate. If there's a trade, I will holler. But I'm quite interested. Actually, George is in the room, so I'm interested to see what
Exactly. I was just going to say that, and he's back from his little sojourn to the home country or to the hometown. I think he's looking bright and breezy, and look at him. He's rugged up. What's it cold there, mate?
Oh,
you cold here, George?
No, I'm well, thanks, man. We've got we're going into winter, next month, but it's far too early. We've had hail, we've had all sorts of things. It's freezing here. I mean, we're into single digits, so I'm out of my comfort zone. How are you guys doing?
Yeah, good, thanks, mate. Really good, really good.
The world down
the
under,
weather's
mate.
changed the other way here, so it's a bit nicer now.
Well, that's
beautiful days here.
That's good news on one front. I think I had told you guys that this year it was the year of the father and son Kilimanjaro summit, but that has changed.
Yes.
That changed in the past few weeks or so, because my son is doing his psychology degree at Portsmouth, and he either had to finish to do his what do they call it, his attachment or in-service, whatever, this year, and then graduate next year. And the young bugger decided, well, I'm not going to do that. I'm going to graduate this year because I want to do a master's in psychology.
Wow.
At London Fashion School next year. So, we've had to quickly change our plans, and fortunately, I hadn't paid anything for Kili, but we're coming up for his graduation in July, and I spent
amazing, mate.
about 10 days there.
Awesome.
So I'm glad it's summer in the UK. Gonna enjoy that. I'll be working.
yeah, it is nice now, mate. It's really good. He's studying in Portsmouth, is he?
He's in Portsmouth. Yeah, he's been there for 3 years now. So
wow.
He's degree.
I know Portsmouth quite well. So my brother went to university, and he ended up buying a pub there. So I was there quite a lot.
Is the pub functional?
Yeah, it is. It's probably not the sort of place that your son would want to go. I mean, when my brother was there, we did kind of manage to make it a bit more, I guess, student friendly. But it's in an area which is quite rough. So I think it probably would have reverted back to form. No, it's not. It wouldn't be the place I'd go now. While my brother was there, it was all right. But yeah, it's one of those areas. He kind of, I think it was a bit of a knee-jerk reaction from him. He didn't really pick the location. He thought, yeah, any pub I can make it really, really cool, but it was just the wrong location. So I wouldn't advise he goes there.
George, you might pick up that pub cheap by the sound of it.
And so I mean so that's one interesting change. I mean, the other interesting change is I think a pretty good example of, instead of mourning and complaining, do something about it. And South Africa has been experiencing terrible grid problems, electricity grid problems, load shedding as we call it. So bad that even though we've got the house powered up with inverters and solar and whatever, the downstream fiber keeps getting cut. So I've had to leave my comfortable trade from home environment and move into a business park.
Oh, right.
Oh, right. Hmm.
So I'm working from a business park, which is fantastic. It's just a pain getting up and leaving home at 2:45 to get to, to
I was
trade,
going to say, mate, yeah. Do you know, I did that for a little while. I had an office just down the road.
Yeah.
And I didn't like it so much because I didn't have the home comforts. I couldn't kind of go and get myself a drink when I wanted to, or, just kind of sit back and, I don't know, just do something else, get on the piano or whatever. And I struggled with that. So I'll be interested to know how it is for you in about a year's time. That's when I think I was there for about 2 years, but I didn't like, it was only down the road, but I didn't like having to leave the house because I was so used to kind of, as you say, having the home comforts. I wondered whether it changes your perspective at all.
So the good thing about it, I think just before I took a break, I had mentioned that I had to make a decision not to spend more than 12 hours in the market. Not that I'm always in the market for the 12 hours, but I said to myself, I'm in the market 3:15 a.m. when Hang Seng opens. So by 3:15 p.m., I must be wrapping up, which is just before the open of the US markets. So I'm glad I made that decision then, because it's kind of when my energy is down and I want to strum the guitar or lie on the sleeper couch. So it's just enough time for me to wrap up. The only problem is I decidedly miss on my early morning exercise. And I used to, as soon as the market closed, 6 a.m., I'd go out and rock and do stuff, but a couple of hours, drop the kid at school. So that's kind of an interruption, which now I have to exercise at night, which I haven't done for years. A bit of a thing I have to get used to. But there's, I mean, you just can't work with what's happening nationally. You just have to. But the business parks, I don't know how they do it in the back office. So they've got generators, solar panels, the fiber is working. So at least on the business front, you get it. But, we'll see how it goes. So just interesting, just hearing your views. And I think, if I can just keep things at a macro level, this is Hang Seng. I took a few trades earlier on. In fact, let me just show that quickly. This was, in the morning session. So, I took that trade. That's one that usually works. If the bears are strong, higher high, low 2 second attempt to go short. So I took that, went up a bit, added in a bit, wasn't comfortable with what was taking place, and eventually, just before we closed, I got out. Made fractions, break even on that, a little bit on that, but I was happy with that. And just coming back, we've had this rally. So I'm looking to go short, and let me explain that now back on the daily. So the rally is not a surprise because there's 3 levels here that. On one side of the mind, I knew that if the bears broke beneath this low, that's what I was looking for. I was looking to see if the bears in the morning session will break beneath this, try and take out the low of April, and see if they can come down and test that channel line. So that's what I was looking at, knowing that the fact that the bears put a bear candle beneath that low test, which also, forget about what took place at that point when the market closed, that was a higher low double bottom. So it's a bad signal, for the bears to have sold beneath. But I thought maybe we might get a little bit more, and turn, whether it's here or down here. But we didn't. And now we've kind of rallied up all the way. So having come up here, 20,000, we've spoken about that a long time. That's a big round number that the market has just been oscillating around. We have a bear channel, so I'm looking for decent enough signal to go short. I don't know, if the bears are going to be able to erase this today. So we need a very strong reversal pattern, which we don't have. They have kind of come beneath the 20,000, but there's no ways I'm selling up here. The high of Friday is still a big factor. So we need to come back into here, pull back, and maybe give me an entry. Would I buy up here? I need a lot more factors as well. High, low, double bottom needs to be strong enough. So I'm not sure if, I'm going to get something to trade today. If it sets up, yes, I'll be here. Off the channel line, that's something I'm looking at, but I can't ignore that.
Before you move on,
yep, sure.
Interesting that you preempt, in my book, a channel. Most people that I've ever watched trade would use two each side before they actually construct that channel. You seem to be preempting it because you've only got one test to the downside. Interesting.
Yes. Now, remember, I'm not trading the daily, right? If I was trading the daily, I would have to wait to see that and then maybe get the low high. But because I'm trading on the 5, that second touch that daily traders are going to be looking for to say a channel, I want to trade that. I want to see if I can find ways to get in. If it pulls back, fine. But when it comes back for the third touch, hopefully I would have banked something already in the month, then I'll take that as well. So it's quite legitimate to wait for that. But I want to take every opportunity that the market is using to create something that the daily traders will be trading. I want to bank and bank.
I fully understand the top side. What I don't understand is the bottom side.
The bottom side as well. So let's say we came down here. So the way I create the channel line, so I connect these points in any case, okay?
Yep.
And then I just take my line here and connect it to whatever the key low I can see. So if we're going to get a strong bear channel, there will be that test that everyone says, oh, we bounced off 19,000, we bounced off the low of March, now we are in a good bear channel, let's go up. I want to trade all the way to that. And if here we get a reversal pattern, I want to trade all the way up. So while it's forming a distinct channel up and down, I want to be in at these key levels because there would be good acceleration up. And on the day, I want to be taking that. So I don't wait for it to form. By the time it forms, then on my risk management, that's when I'm a little bit more aggressive. Right now, I'm going in like this morning, 0.5% risk, wide stop. I can manage that. But once we get confirmed bounces off down here or here, then I can increase my initial risk because the structures are firm, if that makes sense.
Cool. Cheers, mate. What are you laughing at, Ash?
Sorry, I just had a visit from Molly, and I managed to kind of like turn my camera off, and then I just turned it on, and she came back in the room. So, I thought she said goodbye, but she hadn't.
Gold is a little bit clearer for me in terms of where I want to look at the market. That doji on Friday, double top, George, double bottom.
It is if you turn yourself upside down, George.
Oh, there you go. I should have thought quicker.
If you lie on the lounge, you'll see that it's a double top.
And I mean, I caught a little bit of what Ash was saying. I get a weekly kind of report, so I suppose that's going to come maybe next week or the week after on what's happening in Australia. But just looking at technically this 2,000 level, I mean that's a key level that from price action the market is reacting to. Hence all of these dodges. So this double bottom, high and low is good. The problem of that the bulls have is that they have not been able to create bull candles off it. It's still a high low double bottom, but we are in a channel. So Jeff, almost the same kind of thing now. I've been looking at trades off here as this is forming. So I'm seeing all of this is a second touch, all consecutive
Yep,
overlapping.
agree.
When I get here, if today we get to the top of the doji, I'm going to look for failed breakouts above it to come back into the range of the doji and to test this level, the 2000. When we get down here, if we get a failed breakout and if we get a beautiful low test, bull candle, then tomorrow I'm going to be in it, just trying to see if we go the way up to test these levels. And whatever, I don't know how long it will take, but it could take just a couple of days if you look at this to get the top of this bull channel. So this bull channel, as far as I can see it, bulls were strong enough, but they've had to put up a fight, but they're still strong. They're putting higher lows, as complex as it is to decipher. So that's why I use the channel to assist me. So for today, I'll come back, keep looking at it. If I get up here, then I'll look at it. If I get down here, then I'll be interested in that. So that's
I treat them exactly the same way. My only question about the other one was there was only one test on the downside. So you've got actually 3 tests on both sides there, really, haven't you?
Yeah.
That was my only question.
Okay.
Just on that, before we move off gold, the story is actually that Newmont, Australia's Newmont Gold, are buying a US company, and they will become the world's biggest gold miners. Now, when you look down the story, it's quite interesting because it looks like many companies are struggling. So gold miners, it says gold miners worldwide are facing the prospect of stagnating production, harder to mine deposits, and rising input costs. So that in itself, I mean, there's that one sentence would suggest that the possibility that we actually see less gold on the market and possibly push those gold prices higher could well be evident. It sounds like there's a bit of a struggle going on out there. And it's interesting with this because I bought a company called Fresnillo in the UK, which is a silver mining stock, and they do also have gold. But the share price hardly moved. When the gold price rallied, the share price hardly moved, and that may suggest the reason. If they're struggling to actually to mine gold, then it would be a problem. So some of these smaller mining companies may well, according to this, have to go more into acquisitions, mergers and acquisitions, and it looks like Australia's Newmont are just sweeping up some of the weaker animals out there. So that's the story about Australia. That was the thing. It's probably not Aussie related per se, directly. It's just that there's an Australian company that are buying it up. But it is interesting that gold production looks like it might well be on the wane.
It's interesting that they're buying a US company. I've never thought the US were, unless they've got holdings across the world, never thought the US was huge presence.
No, I agree, mate. I think Newcrest might well be in Canada. They're a US company, but they might well have because Fresnillo's got a plant in Mexico, so they do spread their reach quite wide. So I wouldn't be surprised if Newcrest is probably got the whole region, California and Canada and lots of places where there probably is a bit more potential to get some gold. But it does look like it's a bit trickier than it might be a quite tricky environment for gold miners. That also suggests that gold mining stocks may not be the place to go, because as the gold price goes up, even though their profits are greater, if they are struggling to get it out of the ground, does that mean that they are going to have wasted weeks where nothing happens? Does it mean that they're going to have to improve some of their machinery? Does it mean that they're going to have to go and research areas a lot further to try and go and find out where the gold is? Could be some of these companies' costs are going higher. So if you're looking in the supply chain of gold to try and take advantage of the potential for higher prices, the mining stocks might be not the place to be. Might be better to go to the, in the wholesale region, maybe some of the jewelers or something.
It's interesting. I mean, because of trading at the 5 minute, I'm always interested in where would the news come from that can affect the markets I'm trading. So for gold, I have Australian and Canadian news on Forex Factory. Whenever there's red news for those, I'm particularly just keen to see what happens on these markets. So, if if, I don't know, Tanzania all of a sudden becomes the world's greatest gold mine, I'm going to have to find them and put the Tanzanian shilling whatever on Forex Factory, because I'm just interested in, you know, what may be said or what may happen in those countries that may affect these markets.
Yeah. Interesting one, mate. Well, it's gone kind of nowhere recently, obviously. But the dollar is going to always affect the price of gold, and what happens to the dollar in the next 3 months could be something quite huge. The US debt ceiling, as Jeff says, you know, we'd expect them to kind of raise the debt ceiling again, but do they eventually get to the point where they can't? And could it be this year? It's possible. If we're going to see the decline of the dollar, that could be another nail in its coffin.
You know what's interesting, if on the fundamental side nothing much is happening, when I get to this kind of level, I mean, on the day, as long as I have the discipline not to get caught up, you know, we got trading range behavior in anything in there. If I just wait for these breakouts, that's why, you know, attempt breakouts and failed breakouts, you get good opportunities, you know, the market rallying up and coming back. So that's why I'm interested. You know, just to wait. I may miss it and get a huge, you know. So while waiting for a failed breakout, the bears might just sell off. That's fine. Then I'll wait for the next to see. But I'm very keen when I see this kind of stuff for another failed breakout, then, you know, to buy back.
The point is, you need to pay attention right now, right? Because you're at a crucial level.
Yes. Yeah. Same kind of thing, a little bit different on UK 100. So I'm looking to short off the failed breakout of this doji here, and also this lower high, because I'm thinking bear breakout, pull back, which is what you've got. There is a potential for the bears. It is also the measure just below here is the measured move of this one bar doji trading range. So I'm pretty keen to see what happens if I get a decent enough short opportunity for today. So this is good, but we're still above the high of Friday. So, you know, and I want to see, you know, at least one attempt to break beneath this. And then I want to see how strong the bulls are, try and rally it up. And if I get a second attempt to short and come down, then I'm going to be keen. I mean, that's going to be the level for stop. So I'm very keen to short, but I just want to see bears demonstrating strength, because, you know, the bulls could still carry on just going sideways. So I'm short-minded, if that makes sense. For that reason. Euro versus the dollar, just on the last one. Now, you know, key level here, key high low, that level. We've got, you know, all of these are key high lows. So bears did well, you know, on Thursday to try and get beneath this clutter, but still they failed there. So we are in a trading range. I think the bulls are just going to keep trying to create higher lows. You know, they got a bit of a problem, these two bear candles. So I'm only keen to jump into the market down here. I was looking at it earlier on. When I say jump in, whether we sell, so that's not it. But if we come down here and we have a strong breakout, pull back, I'll look to sell. If we come down here again and we get a double bottom and enough strength, then I'm looking to buy all the way up. I mean, it's still trading range behavior. For me, it's not, and the probabilities favor the bears for a little bit more down. But then I can't ignore all of these higher lows. So, you know, there might be a little bit more waiting today, but that's fine. You know, I just keep scanning and coming back to see what opportunities come. That's kind of where I am starting the week, gents.
How patient can you be, George?
You can't be patient.
What's your tolerance for patience or impatience?
I'll tell you what, I'm very patient, but there's a little trick to it. I'm not sitting here doing nothing. So I kind of say to the guys that come to the Wednesday of the market, find a market that is your go-to market. Find one that you just go, I don't care what it gives me, I'm going to trade this market. That's how number one, you're going to develop yourself. Number one, you're going to keep interested. Then mine is Hang Seng 50. So, it's easy for me to say, oh, I'm waiting here, I'm doing that. But I'm not walking around just drinking my coffee, right? I'm watching this market. I'm trying to find ways to get into this market, and whether I just see something here and I jump in and I have to get out. I mean, like here, I took that trade, didn't work. My stop was a huge measure move stop. I saw that, jumped in, hoped that something would happen. It didn't happen, and I'm out. So I wasn't bored while I kept flipping through. So you can choose any market. You don't have to worry about, just choosing. So, okay, euro versus the dollar, that's my go-to every day on whatever. And
that's why I asked you.
Yeah.
because I want you to
Sorry, Jeff.
I want you to go to the monthly chart.
On which one?
Euro dollar.
Okay.
Now I want you to go to 1st of December 2016.
1st of December.
With the trend line. This will be the start of your trend line, right?
2016. Is this here?
Oh, it might be 2000.
2016 is...
Yeah, there's a big bullish engulfing bar down there at the bottom where the low is there. So that's going to be the start of your trend line, right?
Yeah, okay.
And you're going to draw it across to the low on May 2020, I think it is.
So from, what do we say here? Low of 2020 here.
Yep. Now extrapolate that across to the market.
Okay, let me just make it a little bit more visible for the guys here. All right, okay. That's probably too thick to help, but I see.
You see what I'm looking at, right?
Yes.
I'm looking at a false break of that level. And what I plan to do, if in, 16 days' time, that candle looks like that, or even as long as it's bearish, I don't care.
Yeah.
I'll be placing an order above it. Stop loss maybe below the swing.
Right. Okay, whereabouts?
The stop loss below the swing. There, yeah. And my target will be 150.
Can I tell you why that may not be a great idea, Jeff? In my
of course. That's why we're here.
Do you know why I don't think that's a good idea? Because it's on the monthly chart. And that means that to get to 150, you could be waiting a number of months. Now, the problem is... That's
why I asked George how patient he was.
Oh, right. Well, do you know, my issue with that is that if the US dollar stays at, 150 basis points above, the interest rate stays 150 basis points above the euro, then you're going to get lots and lots of swaps.
Holding costs, yes.
Yeah. Whereas if you were to trade it the opposite direction, then you can hold on to it forever and make money while it's sort of every day over day. That would be my issue with it. Not the trade, but just the fact that you may not make as much because of the holding costs.
Yet if the interest rates come down, then that becomes less, obviously, right?
Yes. Or if they go into alignment, then you haven't got to worry about it.
Or what if the suddenly on, I don't know, Christmas Day 2023, the Chinese yuan becomes the reserve currency of the world, or the Australian dollar or euro or whatever, gold or Bitcoin or whatever.
Yeah.
Then what happens to that chart?
Well, then the swaps won't matter at all.
Exactly. So that's really my point. That's the position I want to have, because I think that will happen. I don't know what it'll be. It might be tiddlywinks becomes the reserve currency, but it won't be the US dollar.
Yeah, I get it. Yeah, interesting one though, because I agree with you on that as a potential false break to the downside, and I think there are opportunities to go along on the euro. It all
Maybe we
depends
need
on
to
how
build.
explosive the move is.
Maybe we just need to build a position on the way up and get out on a weekly basis or daily basis.
Yeah, well,
So,
certainly if you, yeah. Well, certainly if you're looking sort of to 150, then yeah, I mean there could be a decent kind of mathematical level to keep adding and see if you can get all the way up there of the whole position.
what do you got for us, George? Am I absolutely crazy in my head?
No. I mean, from a buying bull perspective, many ways you could be looking. You could be saying, well, already we've had that first move, and actually went above that, and that's a pullback. That was the first, entry to get in. But if you're taking that, your stop is going to be down here. So you wait for the second entry, then you can have a tighter stop. The measured move of all of this is to see if the bulls can get above this breakout point where the bears were. And if they get above that, then I mean that just starts to change the whole dynamic, because they are positioning themselves for a possible measured move now, breaking above that. So it's steps, like you're saying. If you're going to build a position, then it's steps, because if they get all above here and then they break above that, 1.5 is easy, right? Because all the forces will be pushing them up. But it's just being able to take your position, hold it, and sit through it.
Now, if we make $3 million and it costs us $2,500,000 to get it in swaps, it's not worth it, right?
Yeah, exactly.
It's too long a wait for nothing.
So you're not going to come with me. That was why I asked you, how patient are you?
If we were playing on the 5 minutes, it's shorter patient periods, and I could hang around with you.
Oh yeah, you're prepared to wait for 7.5 minutes, right? Not 7.5 months or years.
Month of agony is just something else,
Fair enough. Anyway, I just thought I'd invite you into that potential trade at some stage. We'll see.
Brilliant.
Actually, sorry, I interrupted you. You were going to say something earlier.
I was just going to say, yeah, that was what I was going to say. I think because I really like the advice of picking one market, because if you're picking one market, it seems like you're not going to get enough opportunities. But of course, then you have to go down the time frames. So because you're trading on a 5-minute chart, you might get 2, maybe 3, possibly even 4 really good setups during the whole day.
Yes.
Whereas, of course, if you're trading a basket of currencies over longer term time frames, then you may still only get 1, 2, or maybe 3 setups during the day. So it's actually the same, isn't it? You get the same amount of trades if you pick one market, but you have to go right down the time frames to get those opportunities and get a similar amount of opportunities that set up during the day.
You're right. And again, it comes back to what are you comfortable doing?
Yeah.
And if you're comfortable having a basket of markets, you will still find those 3 or 4 opportunities, but you're going to have the energy and the focus to keep looking and saying, this is where I'm marking your chart, so don't miss the opportunities. I find that extremely hard to do. I'm comfortable doing this. And sometimes what I do, if I see good opportunity and I know I'm already like in 2 or 3 trades, sometimes I just literally just delete the rest. So I don't even look at them.
Yeah.
And I just say a couple on, and that's it. And I focus on that until I say, okay, this other one is not going in. Then I take it off. It's really just to force myself.
Yes.
To be focused. Yeah.
Yeah. No, I get it.
I'm all for one, not necessarily market, but one asset.
Yeah.
If you get to know that asset as well as you possibly can, then you really don't need to do too much more at the end of the day, because you will find those trades, because you're far more familiar with what that particular asset does over time. The other way to look at it, of course, is If you're very familiar with one asset, then you can trade all day. But if you are a fantastic exponent of a particular system or trading strategy, if you like, you can generally trade that on any chart. Chart's a chart, right? But at the end of the day, the market is not necessarily going to react the same on that day or that week or that month for all currencies or all indices, or it's not consistent in that fashion. So I think that adage that says, and I agreed with it for many years, that you either trade one asset or one currency or one pair, or you trade one strategy on whatever you like. I just don't think that holds up anymore, because the market does really change, and it's changing. It really is dynamic these days. So I think if you've got one system locked in, then I think you're going to be okay for some parts of the market, but other parts of the market you're not. That was my point.
Yeah, I'd probably say, maybe instead of one strategy, one system, have a couple, have three. That whole basic thing, trend strategy, trading range, or reversal, just not more than a handful that you really become good at. And that then you can apply that to multiple markets if you want, or assets.
Yeah, I totally agree. Yeah, I mean, three, and I'd say maximum of four. And the way really to get those strategies is to sort of stick with your own one and then test a new one and see if it's something that you can actually incorporate into your day. But I really like that, mate, because I've got one where I look at every single currency, and then I've got one where I just trade the FTSE, but on very, very short time frames.
Yes, yeah.
Yep. So when you're starting out, that's a bit difficult. You've been doing it for 15 years plus. So,
fair enough, yeah.
You've got the credibility or the runs on the board to be able to do that. Sorry, George, I interrupted, mate.
No. I'm saying I was interrupting you when you said when you're starting out. I mean, you got to do everything. I still laugh about it. Days when that whole horizontal was full of markets, different time frames, and you're doing everything. There's no other way to discover what works for you than to do that. The last thing you want to do is 5 years down the line and say, oops, I wish I'd learned that. Just do it all. Manage your risk. Just do it all until you discover what works for you.
Yeah, put as many tools in the shed as you can and learn when to use them.
That's it. Yeah.
Hey, we out of here?
Well, yeah, I think we better wrap it up.
Appreciate
thank you very much. Yeah, really, really good. I will just very, very quickly just let you know that I've taken a long on the FTSE. It's going to be a short-term trade, and I will show you it very, very briefly before we go.
I'll give you one trade before we go too.
Okay, here we go. There's a long on the FTSE. Just stops it, and you can see it's on a 15-minute on this 15-minute bar. So just trading the high of that bar. Stops at the lows under the trend line. So if it's coming down here, then it's probably I'll probably flip positions to the short, and then targets are probably going to be up here to this this monthly pivot. So looking for around about 2.5 to 1.
That's it.
That's it. You go, mate.
Righto. I'll give you one as well. It's not tradable yet. I haven't got an order in the market, but it's a proviso. And hopefully you can see what it's Euro Yen. It's on the 4-hour chart. And here's what I need to see. I need to see the candle that is currently forming, obviously, which has got 55 minutes to go. If it's holding on the line, if it's a doji or it's got a red body, that's what I want to see. If it's got a green body, I don't want to know about it. But if it's got a red body, then I will trade long above here. Put my stop loss just below the pivots is fine. So, probably 4 or 5 pips below whatever that level is. What is that? DR1. So you want to get your stop loss below there. And first take profit will probably be at that level, which is 148.68. So you got about, what, 50 odd pips, something like that. And then just let it rip. Get safe in the market there and then just let it rip, because if this goes back to trend, it's going to keep going. If it doesn't, then fine. That's all good. You'll be safe in the market when you hit that level. But if this goes back to trend, then, and trusting the euro to be weak is probably not such a bad thing.
Good
That's
stuff.
it, guys. Like I said, if that's got a green body, I'm not interested. I won't trade it. But if it's got a red body, then I'm interested. Or it's a complete dozy, I'll trade it. That
Cool,
is
mate.
it. Right,
All
let's
right.
get out of here. George,
Let's get
great
out
to
of
have you
here.
back, mate.
Cheers,
Yeah,
Vince.
I think next week might be a bank holiday. We've had so many bank holidays.
Okay.
I think next week's a bank holiday. Is that right, Jeff?
Does anybody work in the UK these days? It's just party.
I doubt it. After all.
I think it was the 22nd, or is it the 29th?
No, it's the 29th. Sorry, my mistake, because the
It's the
29th is the
29th, right.
last Monday of the month. Yeah.
Okay, yeah, so we're back next Monday. And of course, we're here on Thursday as well. And thank you, everybody who's joined us today. Very quiet in the room, I've got to say. Must have been great content, clearly. Have a wonderful week, everyone. And we look forward to seeing you on Thursday when we'll go around again. See you, George. See you, Ash. Thanks for being my trading buddies. Catch you later.
Okay.
Bye-bye. For now.